Hi everyone. So in last chapter we studied about that what are actually futures and how they are in our Indian market. Now in this video what we will learn is how your trading gets amplified when you are trading in futures, and I'll just explain you with few examples, and I will be able to show you how the payoff chart and all the other things are working if we are using futures as a trading instrument, because it actually amplifies your profit, and the leverage what we get actually helps you in gaining extra edge over somebody who is doing it in cash segment. Most of the time trading involves risk, so it's if it is beneficial for you, it may be harmful for you also. Just because we are using leverage means a contract value of say 17 lakh rupees, you are able to buy it at 2 lakh rupees. It means that if a stock is going in favor of you or the direction is going in favor of you, you are gaining more. Similarly, if it is going against you, you will end up losing more also. And it is actually a double-edged sword also, which can actually dent your capital. So trading involves significant risk. If you understand things and with your learning, you may end up being a better trader than others. So let's move to the screen and let's see how it works. Okay, so as we discussed that this is Nifty future and Nifty July future, let's see how all these things are working. Okay, now I have come to option strategy builder. We have come to create own strategy. Option strategies we will discuss in the later part of the this series, but right now let's see. So we have Nifty over here. I'll just click futures. The moment I click futures, you can see we have contracts of 31st July, 28th August and 25th September. Means 3 contracts are open at this point of time. If we click 31st July, if we simply buy, so what is the margin requirement? Required margin is 2.17 lakh rupees, right? 2.17 lakh rupees is the margin requirement. Now I can multiply the lots. If I take more lots, it will require more margin, but right now I will trade with only one lot. Okay, now if you are seeing over here with 2 lakh rupees margin, profit it can be unlimited, losses it can be unlimited, right? But that is only when something extraordinary happens that these values can appear of unlimited. Whereas you will know that if say current price is say 25,358, okay, and I have this option of writing this. So for example, if I am say bullish about this stock, okay, say I feel that this stock particular or Nifty may go up from here, I have actually placed a buy position. So buy 31st July future one lot. Okay, now if I see that what if Nifty increases 50 points from here, so Nifty goes till 25,400. okay, if Nifty goes till 25,400 from this particular point, my projected returns are 2,658 rupees. Similarly, if Nifty goes down 50 points from here, we are losing 4,800, because currently market is at 25,360. okay, so from 25,360 till 300 we are actually losing 60 points, right? When we took the example of bullish side or market is going in our favor, we took example of 25,400, which was 40 points from this level. So in 40 points you are gaining 2,600 rupees. Now if market goes up by 100 points, you end up gaining 6,000 rupees. This is with one lot. Now if you calculate, say if you have judged the right moment, if you have judged everything correctly, and you are able to gain 100 points in Nifty, then this 6,400 rupees on this capital of say 2,17,000 is almost 3% return. But everything comes at a catch, right? The catch over here is this 6,400 rupees does not include charges of trading. So it may happen that out of this 6,400 rupees, you will end up paying 500 to 600 rupees in charges also. Actual charges you can cross check while trading, but you will end up paying a decent amount of charges while trading this. So you will end up paying say 6,400 rupees minus charges. So say you have gained 5,500 rupees. Now you have to calculate return based on this, but don't get excited with it, because most of the days maximum returns that people are able to generate on a consistent basis are not more than 40 to 50 points. So this is actually the points which people are able to make, and this is on the good days. What if you lose some money? So you may end up losing 4,000, 5,000 rupees plus charges. When you are making profit, charges get deducted, but you are making losses, charges gets added to the losses. So you will face many days where you are facing this problem that you are incurring losses plus charges, mean you are actually taking a dent in your capital, because these are futures contracts, and this projected returns is calculated based on the number of points you are chasing into 75. Okay, returns you can keep calculating, but at the end of the month you will realize that on few days you have incurred losses also, few days you have earned profit also. If you at the end of the month are positive in terms of your profits, you are a good trader. If you are say at loss at the end of the month, you still need to learn, and that is why I will suggest you to keep seeing these videos in a repeated way. Now when we were talking about Nifty, we were also talking, you can see the chart and you can decide on how to trade and all those things, right? So if your chart reading and all the analysis, if it is going correct, there are chances that you may end up making some money, but then you have to be very cautious about your stop losses, about your targets, and once all those things are there, then actually your returns get amplified with your futures contract. And I have explained you the payoff chart also, that if it goes up like this, you end up making some money, and if it goes down, you will end up gaining some money. Now why people still trade futures? Because I explained you that it is a double-edged sword. Why people still use future is because first is the money required is much less. Second, if you actually hold a stock, you are not allowed to short it. You can either sell it, but you are not sure whether the stock price will go down or not, right? So you are not allowed to short the stocks which you don't hold. If you can short the stock which you hold, but actually you are selling it, you don't want to sell the stock because you think that in future the stock will do well. It is just a temporary phase where the stock prices may go down. So अगर ये हो रहा है कि stock prices कुछ दिन के लिए डाउन जाना है, तो मैं स्टॉक को बेचूं क्यों? फिर मैं होल्ड कर लूंगा, उसके अगेंस्ट मैं फ्यूचर सेल कर दूं. सो मेरा स्टॉक का होल्डिंग भी रह गया एंड मैंने फ्यूचर सेल कर दिया, ठीक है. एंड जब मार्केट नीचे गया तो मेरे को फ्यूचर सेल में पैसा मिल गया. अगर मैं कैश सेगमेंट में सेल कर देता या शॉर्ट कर देता, तो होता क्या कि व्हाट इफ द प्राइस गो अप, then probably I may not get entry again. Now you may have a doubt that if I have the stock and I short, and what if the price goes up? What will happen is your stock value also goes up, then only the futures value go up. So technically you will not end up in a losing side, because if it is going down, you are gaining with your short position. If it is going up, you are gaining with your stock ka holding. So that is why where the difference is, and most of the people, they prefer trading in stock futures or index futures instead of actually selling it in cash segment, because in cash segment nobody wants to sell it. And plus, if you have a good holding of stock, you can pledge those stocks, which we learned in the subsequent chapters. You can pledge those stocks and take multiple positions in different contracts with that same money. Then why do you want to sell it? Because you can use that money to trade in other stocks. But you will learn this pledging in later part of the series, but it actually helps in amplifying your returns. If you end up becoming a good trader, it will actually end up helping you gaining more and more money.
Investments in securities markets are subject to market risks. Read all the related documents carefully before investing.